Welcome, ladies and gentlemen. We are still in Vancouver. The Vancouver Resource Investment Conference is over, and we are now at the offices of GoldMining. You remember the former Brazil Resources, and we want to talk to the chairman, Amir Adnani, to give us an update. Amir, welcome, and thanks for taking the time.
Welcome to Vancouver.
You had a name change, GoldMining. We see it here. When did that happen, and what is now the new symbol?
As you know, last year for GoldMining, formerly Brazil Resources, was a real transformative year. And over the last few years, we've really expanded the portfolio outside of just Brazil. And we made the acquisition of the Whistler project in Alaska. Last year, we made the acquisition of the Titiribi gold copper project in Colombia. And so it was clear to us that it was time for a name change and a rebranding to really reflect this more diversified, multi-jurisdiction portfolio that we have now assembled. And so with that in mind, we did the name change late last year and changed it to GoldMining. We were also able to secure a new four-letter ticker on the TSX Venture, the ticker GOLD, gold. Simple, and GLDLF in the US. And all the new information we're going to be unveiling on our new website, goldmining.com. So it's been a very transformative and substantive 12 months for GoldMining.
Fantastic. So what have you achieved, I would say, the last 12 months? I mean, the last time I was here, that's almost a year ago, of course, but within that time, you acquired some new properties, and I think you are almost now well over 20 million ounces gold equivalent, right?
We talk about the fact that we're building leverage to higher gold price. We talk about the fact that we are emulating, sort of what you would say maybe the silver standard business model in the silver business, what they did in the 90s in terms of buying ounces of silver in the ground. GoldMining has reached that point where you can really see the critical mass that we've been able to put together. On gold only, measured and indicated to be over 10 million ounces now and inferred over 8 million ounces. As you mentioned, gold equivalent in all categories, almost 23 or over 23 million ounces. We're getting big. We're sort of in that 1% club, the 1% of companies that have as many resources as we do. And it didn't happen overnight. You got to remember that this has been 6 years of taking advantage of a very bad resource market, especially between 2013 until late 2015.
But it gave you cheap projects,
That's
right?
what gave us the window. Everything that we're talking about today was really made possible because we were able to take advantage of that window. It's interesting because on the eve of Donald Trump's victory, I think we all thought, those of us in the gold business, we all thought, this is it, gold's going to take off. And when it didn't, at first maybe there was a bit of disappointment, but then there was the immediate realization for us that, all right, time to make more acquisitions. So anyways, I feel that the strategy in terms of building those resources and the ounces in the ground has really been executed well. And now it's about just continuing to expand the resource base.
Great. So when you say expand the resource base, how do you want to do it? You are drilling on the properties, or you want to add by acquisition, or both?
It'll be a combination of both, but especially when you see some pullback in the gold price. We see obviously some weakness here in the gold price when it's been below 1,200 since the election results came out. We still find it to be a window has opened up to make accretive acquisitions, to be able to acquire resources for less than we're trading ourselves or less than the replacement cost of those resources. But at the same time, of course, our own portfolio is a great source of organic growth for the company for a long time to come. But definitely these dips in the market allow us to perhaps go back to what we're very good at with acquisitions.
Great. So this gives me the question up, what do you want to do, let's say, in the longer future with that? I mean, to acquire cheap ounces, this is a great idea and great value creation, of course. Let's assume gold goes to 1,500, 1,800. What might be the plan? Do you want to bring maybe some of this project by yourself in production? Do you want a joint venture? Do you want to sell maybe some higher? Because you want to build shareholder value, right?
It's a very exciting position to be in because you're in the driver's seat. And you're in the driver's seat because the gold business and the gold sector, as you well know, over the last 5 or 6 years, The majors really cut their exploration budgets. The total amount of gold resources or reserves in the world have been depleting and dropping. And overall, new discoveries have been quite scarce and difficult to find. And that side of the business, the exploration side of the business, definitely has been very thin and running on low fuel. That is really the big opportunity in the coming years, that as we see a recovery in the gold price and as we see a recovery in commodity prices, including copper, because we have two very large gold copper projects between our Whistler and Titiribi project, we're really in the driver's seat to be able to advance these projects, be in a prime position for M&A, be in a prime position to either joint venture these projects or advance them ourselves. You know, we did a successful equity raise in November where we raised money at $2.50. We raised over $12 million. Today we have over $21 million of cash on hand.
Oh, that's very healthy, I would say.
With no debt, very healthy. And so we have, again, why I say we're in the driver's seat. We have the financial resources to advance this very strong portfolio that we have at a time when the industry has really seen these declining amounts of resources, new discoveries. And I think in the next cycle, we're going to see the majors really be scrambling, as we've already seen M&A activity is going to pick up. And there's going to be a scramble, in my opinion, for resources, especially larger resources, and especially in countries where you have mining as an established industry, established mining laws. So you look at Colombia, right now it's one of the really the hottest jurisdictions that you're seeing good developments. A lot of companies are making great progress in Colombia, especially in the central cocoa belt in Colombia where we are. Brazil, obviously one of the top mining jurisdictions in the world, and of course US, especially with the incoming Trump administration. There's great expectations that the mining and natural resource industries will do very well under Trump in the next 4 years.
Great, perfect. Final question. What is, let's say the most important milestone or the most important milestones you want to achieve 2017?
We have so many goals, and you know, it's going to be, I think it's going to be a multifaceted year for us. It's going to be a year about sticking to our core business, the business of taking advantage of dips in the market or weakness in the market to make new acquisitions, number one. Number two, to advance our existing portfolio. Again, we're in different countries and areas, but some permitting in Brazil with our São Jorge project, some exploration work perhaps on our Titiribi project in Colombia. We have our Rea uranium project, which is a joint venture with Areva. Almost all of last year, we never even once talked about this because uranium really had a bad year last year. The uranium price was the worst performing commodity last year, down 40%. So we stopped talking about the fact that we have a joint venture with one of the world's biggest nuclear companies in one of the hottest exploration addresses for uranium, Western Athabasca Basin, you know, on trend with companies like Fission and NextGen. Well, that hasn't changed. We still own 75%. We being GoldMining, we own 75%. Areva owns 25% of this project called Rea. It completely surrounds Areva's high-grade Maple River deposit. At a time where uranium has turned a good corner this year so far, there's been some good momentum and news and developments about uranium. And so this year could also see GoldMining look at ways to monetize this uranium project favorably for our shareholders, whether it's a spin-out or a divestiture. So we have really anticipate to have a very busy and multifaceted 2017 between acquisitions, new projects, our existing portfolio, and uranium being back as a very interesting optionality for our company.
Absolutely. And you have one of the biggest companies in the world as a partner. That's fantastic.
It really is. and really the balance sheet to support all of this. Really the fact that we were able to really strengthen the balance sheet, get over $21 million of cash on hand, no debt. This company is in the driver's seat, and that, you know, I'm excited about 2017 for us.
Super. So I am, and Amir, thank you very much for that, and we look forward for an update then quite soon, hopefully.
Yes.
And all the best. And I would say driver's seat is good. Keep it going. Drive it. Thank you.
Yeah.
Ladies and gentlemen, that was Amir Adnani, the chairman of GoldMining. Yeah, you heard it. Name change, not a new company, of course. It's only a name change because they are now, really in multi-jurisdiction jurisdictions, multi-countries. You heard it. It's Alaska, it's in Canada, they are in Colombia, in Brazil, yeah, with over 23 million ounces of gold, gold equivalent, of course, but also some uranium, some copper, you name it. I think 2017, if they keep it going like this, again, another year of value creation for the company, for sure. We keep you posted. Check the company out. Thanks for watching us. Bye-bye from Vancouver.